Hello, and welcome to the AMA's Steps Forward podcast series. We'll hear from healthcare leaders nationwide about real-world solutions to the challenges that practices are confronting today. Solutions that help put the joy back into medicine. AMA's Steps Forward program is open access and free to all at stepsforward.org.
Hello, everybody, and welcome to this episode of the AMA Steps Forward podcast series. This is your host, Si Chen, Physician Director of Practice Sustainability here at the AMA. To discuss the basics of medical liability insurance, I'm joined by our guest, Chris Albano, who is the National Account Manager at AMA Insurance. Thanks, Chris, for being here today to discuss this important topic.
It's my privilege to be here, and thank you very much for having me, Doctor.
Before we get started, would you mind telling our listeners a little bit about yourself and your background?
Sure. So I have 20 years experience across the industry, working in reinsurance, claims, underwriting, and sales and marketing. I've worn many hats. A year and a half ago, I joined the AMA and kind of spearhead this MPL program that the AMA has started to offer their physicians, and it's starting to grow, and we're able to serve America's physicians. So we're really excited with what we have in store for 2025 and beyond.
You mentioned the MPL program, which stands for the Medical Professional Liability Insurance Program. Can you describe that in more detail for us?
Yep. So the AMA, we have our insurance agency, and we offer different lines of insurance there for America's physicians. One of the lines that is now offered that was not offered up until about a year ago was medical liability insurance. So we've partnered with a few select carriers to offer physicians different types of medical liability insurance. And we're in all 50 states, Washington, D.C., working with these different carriers too. They've been wonderful. They've been accommodating. And they've been really excited to partner with us too, and everything the AMA brings to the table.
Well, I'm so glad that you're able to join us today, given, a lot of carriers, as you say, are state specific, but now we have an in-house expert, if you will, on medical liability sort of throughout the entire country. Obtaining medical liability insurance can be a stressful process for physicians, especially those transitioning from training and those going into independent practice. Could you tell us a little bit more about the process of getting medical liability insurance? And I know some people call it malpractice insurance, but for the purposes of our talk, we'll call that medical liability insurance.
It is definitely something that can be stressful, but it doesn't have to be, I always say. What we try to do is educate our physicians to help them make the most informed choice that's going to fit them best for their practice and their needs. A lot of the times, a physician new to practice is going to be joining a hospital or something like that. So they would be right under the hospital policy. If a physician is going to be going out on their own or working for a smaller practice under another physician, they would have to get their own individual policy. There's often new doctor discounts, which are fairly robust, especially in the first year. That's a significant amenity many carriers offer. So it's really going to depend on the type of policy and their specialty. You would want to have a reputable carrier, a carrier with outstanding financial rating, an outstanding reputation for handling claims in the event that you ever are brought into a lawsuit. You always want to see how they handle their claims, what their process is. If a company goes to trial, what the trial success rates and things like that.
I think you've touched upon, all of the things that one could do to evaluate how good an insurance carrier is. How do we go about getting that information and data that you've talked about?
The information can be found online, or they could also work with a broker or an agent who has access to different carriers, and they would be able to answer the basics for the physician that they would have as far as obtaining the right coverage types, coverage amounts. And the way things are trending now, it's becoming a much more broker-focused industry than direct to company for the physician.
That's great to know. Can you outline the, main types of medical liability insurance that are offered, what we should look for in each type?
Yep. So if a physician is trying to buy their own individual policy, there's two types that they could choose from. You have a claims made policy. It's when the covered event must occur on or after the retroactive date, which is the first date of coverage. And the claim also must be reported during the policy period while it's active. And that is the most common type of policy in the medical liability insurance space. Second one is occurrence. This is considered a stronger policy, and it's when any claim arising from an event that occurs during the policy, it's covered regardless of when the claim is reported. Essentially, an occurrence policy has tail coverage built into it. It's already built in. You don't have to worry about purchasing it or anything like that. It's already in there, and that's why I always say occurrence is the stronger policy.
Can you talk a little bit more about what you mean by tail coverage?
Sure. So when the claims made policy gets canceled with your current carrier, you have an extended reporting endorsement. It's also known as tail coverage, where the medical liability carrier will agree to cover events that occur during the policy period when the claim is reported at a later date. The official name for it is extended reporting, and the price is generally 200% of the last premium. It could vary, but I say as a rule of thumb when I'm speaking with a physician that if you're paying $50,000 in that last year and you have to buy a tail, it's probably going to be approximately $100,000. You also have something called nose coverage or prior acts. This is when you switch from one carrier to another, and the new carrier will agree to cover claims that come from the previous policy and the retroactive date that would occur during the new policy period. So that's prior acts. Prior acts is great because you could basically continue your claims made policy from one carrier to another, and you don't have to purchase a tail then because the tails are so costly. One other thing to keep in mind with the tail coverage, not to get too afraid about the price, many of these carriers will offer their insureds free tail coverage at retirement or something called DDR, death, disability, and retirement. So if any of those events happen, the carrier will offer a free tail, so you will not have to pay for it, which is really a great amenity offered by these carriers.
Thanks for that information. When I was transitioning between two practices, I was able to get nose coverage because I was keeping with the same carrier, but at different locations. And so that was a great savings in terms of dollars and cost for me. So I think it's great that folks are aware of this option. In terms of transferring states when you're changing jobs, I know that many states and employers require a certain amount of minimum coverage. Can you tell us more about this? And should docs consider coverage amounts above the required minimums? Is that a thing?
Every state is different as far as the minimum requirements go. Always good to check. Any agent would be able to tell you with the state you're in what the minimum requirements would be. And then they'd also advise you, because another thing to keep in mind is if you're a surgeon, you're probably going to want higher limits than if you're like a psychiatrist or a PM&R, no procedures, where you're not really doing anything invasive. So I also think that the limits you carry could depend on the specialty. And if you're doing things that are invasive and might be considered more high risk, you, of course, would want to carry higher limits than just to be fully protected. So that's how I look at it.
In selecting an insurance carrier, can you tell us about what to look for in terms of the financial health of the carrier?
You're always going to want to go with a carrier with a solid financial rating. A minus or better. A minus is considered excellent. So A minus or better is a great rule of thumb to have. If a carrier has an A minus rating, they're most likely not going to go out of business or anything like that. So checking the financial rating is very important. It's one of the first things I would talk about if I was advising a doctor on buying coverage.
I did want to ask in general for our listeners who are in different states, obviously, are there insurance regulators in each state?
Department of Insurance is state specific, so it is in each state. There are certain states that have funds that the physician will have to pay into. The part that they pay into the fund in these states, you cannot get discounted. It's just a flat number based on the territory and the specialty. Each state has different rules and regulations. Any broker who specializes in this would be able to advise on that.
Right. So I just wanted to clarify your comment about state specific funds, which are generally patient compensation funds that were designed to decrease medical liability costs. Switching gears a little bit, in terms of physicians who are stepping away from practice or retiring, or they're changing jobs, what information do they need to keep on hand from their the current insurance carrier that they're going to be leaving?
One thing I would keep is a copy of all the declaration pages that you get every year at your renewal. That's something always good to have just so you have a record of all the coverages you've had. If you got a free tail, if you were retired, you would get an endorsement, or if you purchased a tail, if you were going on a sabbatical or if you were just taking some time off and you purchased tail, you weren't sure what your next step would be, you'll always get an endorsement for tail. So that's definitely something that you want to keep. So if a claim were to come in, you would just reach out to the carrier, even though they would probably have it. It's still something you would want to keep for your records. The cancellation notice, which would show the day that the policy terminated, that's something I would keep. And a copy of the policy, because that's what's covered.
Good to know. Good to know. Let's say I'm a physician either in training or in private practice, and I'm looking to become an employed physician at a healthcare organization that provides medical liability coverage. Are there any issues that I need to pay attention to when I'm looking at this, negotiating or, looking at my contract with regards to medical liability insurance?
I would always check to ensure that the limits are going to be robust enough that if a claim came in, I would be covered. Something I always advise physicians to when they're in this kind of setting is to put into the contract that the employer will provide the tail coverage for them when they leave the practice, or if they're terminated or whatever. And so they're not responsible to purchase the tail coverage because of how expensive it is. So that's something I always tell a physician, to make sure that the tail coverage is negotiated in prior, because I've seen so many times where it wasn't, and a doctor worked somewhere for a few years and then they were leaving and going on to a new practice, and they were stuck with this really expensive tail bill. And it's unfortunate because they just didn't know.
Got it. One thing I wanted to ask about is I know that some larger organizations are self insured. Can you tell our listeners what that means and what the implications of that are?
Self-insured would just mean that they're going to pay any claim out of pocket, that the cost of the coverage does not make sense from a financial standpoint.
Just to clarify, a self insured organization would be paying claims out of their own pocket, not the doctor's. So I was part of a large organization, and they had a couple of layers of insurance. And the first layer was self insurance, but they did have excess damage coverage, catastrophic coverage, if you will. So I think that that's sort of how some of these larger organizations structure their coverage. Let's talk a little bit about a growing trend of physicians that are going into either locum tenens or as an independent contractor. What are the considerations for physicians, wanting to do these roles where they're not necessarily practicing in one location for a long period of time? How do they get coverage for medical liability, and what is the process going into that?
Locum tenens and independent contractors are two completely different things. So with a locum tenens, a doctor might be away for 2 weeks. What will happen is a covering physician will come into the practice and they'll be covered under the doctor's policy that is active at the practice. Independent contractor is completely different. They're going to have to purchase their own coverage. So they're going to go through a regular application process. Now, if you're an independent contractor and you're working at multiple locations, you'll want to ensure that the coverage you have will cover you at all those locations. It's not limited to one practice. So that's always something to check. So two totally different scenarios that often get mixed up. That was a great question.
If a doctor's a locum tenens and that the physician that they're covering for has a claims made policy, what are the implications for that? Does then the locum tenens, the physician covering, need to also get tail coverage for that, or does that also go with the doctor that is being covered for?
It would be inclusive under the main doctor's policy. So when that locum tenens leaves, he does not have to worry about buying a tail.
So in terms of those folks that are independent practice owners, what are the implications for their medical liability policies?
So you would have the ancillary personnel like RNs and medical assistants generally covered under the policy if they have personnel like that working under them. If they start to grow and they were to employ a nurse practitioner or physician assistant, that would be able to be added, but at an additional charge. Also, if the practice grows and you add other physicians, you would want to look at adding something like an entity policy, which is not very costly, but it would protect your business in the event of a claim from one of the employed doctors.
Got it. And is that part of the malpractice liability insurance, or is that something different? Is that a different insurance?
Part of the malpractice liability insurance, it just covers the entity. No other doctors will get brought into a suit. If Dr. A is sued, Dr. B and C will not get brought into a suit from their policy. The entity is just covered under it. So that's how that works. It's becoming more and more popular, but not all groups have it. A lot of the times they'll just have their business name share limits on the individual policy.
Great to know. I think we already talked a lot about getting insurance, these kinds of things. The thing that we're all trying to avoid is obviously getting sued, but we all know that it's a fairly common occurrence. So in the unfortunate event of a lawsuit, can you tell us how like a physician's medical liability insurance carrier will be involved in that lawsuit?
There are some signs that a claim is going to be reported. There could be a request for records, or you get a call from an attorney. Whatever it is, I think that the most important thing to do is report everything to your carrier on a timely basis. Do not alter any records. Want to give everything as is. Do everything as quickly as possible so the carrier could get a claim specialist assigned to the case and then start to move everything along, because the beginning of the claim process is very crucial. So it'll go through a discovery phase where each side, you have the plaintiff and the defendant, they'll get to question each other, and the carrier should be there all along. The claims department will be asking the doctor for information. There'll be depositions where they'll discuss the claim. There'll probably be some independent medical experts who are going to testify if it goes to a trial. If a carrier has consent to settle, they could go and settle a claim if they feel like that would be the best route to go. If it's not defendable, if they need your full consent to settle, they cannot do that without the physician giving the okay. So that's another thing always to ask up front. It's called a hammer clause sometimes too, but it's something good to know. And a lot of doctors don't know about this until it's too late and you're at this stage. So best advice I would give the physician is just to be as transparent as possible. Always know that just having a claim does not mean that a carrier is going to drop you.
Can you tell us a little bit more about, how a attorney is assigned? Is it the carrier that assigns a defense attorney, or is that something that is joint between the doctor and the carrier? How does that work?
Yeah, that's another great question. A lot of the times, these carriers will have in-house attorneys, or they'll be contracted with some law firms who specialize in medical liability claims. I've seen many times, though, where a physician has come to a carrier and said they want to use their own attorney, and the carrier has approved that. So that's another thing to keep in mind. And that was a great question you had.
And I've heard of this thing called the NPDB. What exactly is that, and how does that play into a claim versus a lawsuit that's adjudicated? How does that work?
The NPDB, it stands for National Practitioner Data Bank. It's basically a claims history. It'll list all the paid claims that a physician has on their record that are reported. It's a little different though from carrier loss runs, because if a claim doesn't pay, or if it's open, it's not going to show up on there. So a lot of the times, if a doctor is applying for insurance, the carrier that they're applying to will say, I need a loss run from your carriers, that the NPDB loss run will not suffice because it doesn't always list all the claims. So if there is a frequency issue with a physician, but there's no payouts, they're not going to see that on the NPDB data bank report, but they'll see that on a carrier loss run, because that is a little more detailed and it lists everything on there.
And finally, are there any other pearls of wisdom you'd like to share with our audience?
I would just encourage to ask as many questions as you can. If you're not sure about something, there's people who can help you. There's no such thing as a silly question, because the more educated you are on this, the easier it'll be for you to find a coverage that works for you. There are many really good carriers out there. Some might fit you better than others.
Well, thank you so much, Chris. Chris Albano is the National Account Manager at AMA Insurance, and he's been our guest today. Check out the episode description to explore the resources mentioned in today's episode. And until next time, stay well.
Thank you for listening to this episode from the AMA's Steps Forward podcast series. AMA's Steps Forward program is open access and free to all at stepsforward.org. Steps Forward can help put the joy back into medicine by offering real-world solutions to the challenges that your practice is confronting today. We look forward to you joining us next time on the AMA's Steps Forward podcast series. stepsforward.org.